So the market's down a little bit today. Is it anything to really concern ourselves with?
No, it's not. It won't cause much of a concern. It's been like this in the last few weeks, basically. We see investors buy and trade on the short term of the market. You buy and then take your small margins as the profits come in. Basically, one other factor is that long-term credits are not available for investors to play with in the equities market. Credit basically is tight because of liquidity. And then if you look at the yields, very good yields on fixed income securities of short term, you will understand why some investors would diversify their portfolio and basically move to fixed income.
Talk to us about what's been going on in the money markets and the bond markets. Results of the Treasury bills released from the open markets operations?
Yes, there was open market operation yesterday. The CBN offered 60 billion naira worth of T-bills. The investors and counterparties didn't go in bullishly because probably of tightness in liquidity. And so yields were very, very, very high at the auction. But what we saw the CBN do was to cap the yield at which they were going to take money from the system. And so they issued 25 billion instead of the initial 60 they had offered. Basically, it just showed what direction we would expect for fixed income security. The yields are definitely going up, basically.
Let's talk about the Naira. It's starting to show a little bit of strength against the dollar, coming in at a straight 155 to the dollar. What do you attribute that to? I mean, we've seen globally dollar weakness, but it's, often that doesn't seem to really be the case in Nigeria. International performance of the dollar doesn't reflect in Nigeria's market.
Okay, in the first quarter of the year, most spending and preparation was geared towards election. Now the elections are over, inauguration has been done, and then the country is moving on. The one other factor is that oil companies are beginning to sell to take advantage of the prices at the level they are. And then CBN, of course, has that major objective to meet demand. They did that on Wednesday. They sold $500 million and met demand. What we've seen is a revaluation of the Naira by 1 Naira 80 kobo in the last 7 days. We expect that in the next 1 week you will see this continue.
Impact on the interbank market in general of Naira strengthening?
Yes, I just said that it increased. Revaluation was about 1 Naira 80 kobo. That's a whole difference.
All right.
Compared to what happened last week.
All right, let's talk about liquidity in the interbank market. You did refer to it earlier on. I mean, what sort of rates are we going to start seeing?
We're seeing 10.75. Last week, rates dropped to between 10.25 and 10.5 because federal allocation just came in. But what we've seen is that as CBN increased the amount to be sold, amount they sold last week for dollars. They sold $800 million last week, and this week they sold for one auction $500 million. This has taken out a lot of Naira, costing because of that dollar inflow. We've also had T-bills issuance in the last couple of weeks. We've had yesterday open market operation. They came to mop up some more Naira by selling T-bills 25 billion. So these are factors that are causing this tightness, and of course it's in line with the strategy, or the major objective of CBN to target inflation. Basically the drive is to get inflation to single digits. We are not there yet, we are still at 11.3, but with the way it's been growing, with the increase they've done at the MPR at the MPC, you see how serious they are driving at that figure. Single digit.
I mean, you talk about the CBN's priority being to get inflation back down 10% below, but when they made the decision at the MPC recently, inflation wasn't a major consideration because we've seen inflation looking a lot better. So going forward, what do you expect is going to happen just by way of CBN actions or MPC decisions and inflation in the country if we do start to see it stabilize?
Okay, from feelers, from what I've gotten from other counterparties and other dealers in the market, basically we expect the CBN and the MPC to maintain rates at what they are. They are satisfied at what rates are doing and the level of liquidity. Because just like you said, inflation had been curbed in the last release we had for 2 months. We've seen it drop from 12.8 to 11.3. So basically, we expect them to maintain at this level because further increase may actually almost stifle activity levels in the economy. An economy without credit itself may not be well driven. Activities may drop here.
Okay, in other news, we've heard that the Pensions Commission of Nigeria is increasing capital requirements for pension fund administrators. How's that going to impact the bond markets, the secondary markets? Because there is a concerted effort to start getting institutional investors and pension funds in particular to be very active across the spectrum of markets.
Okay. Capital base of PFAs have been increased from 150 million to 1 billion. This was done after due consultation with stakeholders. This will kick into effect next year, June, by the end of June. So they have a whole year to recapitalize. We would expect that some PFAs will raise funds via the equity markets. Some would some would attract foreign inflows. And when this happens, these companies go bigger, they have better infrastructure to work with, IT infrastructure to deliver better service. When funds come into them, basically they invest a lot in fixed income securities as regulated, as directed to do. So we expect this to drive our secondary market. When these demands come into our market, it will help the bonds and T-bills market to be more active, basically.